Hello there, this is fairbinaryoptions.com, and in these crazy markets that we have, I would like to buy call options on the US dollar and Canadian dollar right here, 113.44, as I am bullish from both a technical point of view and the fundamental one. The thing is that this market, as you can see, this is a daily chart, and this daily chart is quite, let's say, interesting, because from this moment of time, from this move to the downside, from here, from this move lower, everything that we have here to the upside is nothing but an impulsive move. But this impulsive move has a third wave that is completed with these highs here, like this. But this third wave is starting after this contracting triangle from this moment of time. Now, normally, in order to have a so-called impulsive move with a third wave extension, then the fifth wave to follow should not be more than 61.8 out of the third wave, but it is more than 61.8, and that means that we are going to have a fifth wave extension, is being called, and this fifth wave extension should point towards even higher values. How or what to do in this case? Well, we need to calculate the move that started from here, like this, the move out of this contracting triangle that ended here. So this is where the third wave started, from here, and to put it here like this, and to take out of it 161.8. Now 161.8 out of this move, it should be calculated using the Fibonacci retracement from here to here. And then if you take 161.8, let me make it a bit smaller, from here to here, and this distance should be projected by the moment that the fourth wave ended, and it points towards a staggering 1.22. Now in these days when everything seems to be on the short side, if you want, with equities falling, with everything being sold aggressively, the US dollar Canadian dollar is always telling a risk aversion story. It is a currency pair that is trading in a risk off mode. It means that it will rise with euro dollar falling, with Great Britain pound US dollar falling, with Aussie falling, and so on, and with equity markets falling. This is what this currency pair is telling. So while it is not pleasant for the general bulls, the US dollar Canadian dollar should go to the upside. So as a consequence, I would like to go and buy call options on the pair with end of week expiration date. End of week means tomorrow, by the time the US equity markets are closing, and this means that we should have something like 1.5 days for the option to expire. So buying call options with end of week expiration date on the US dollar and Canadian dollar. And it means, of course, that we will have the CPI also into this option. It remains to be seen if it expires in the money or not. Thank you very much for being here. This is fairbinaryoptions.com. Let's see if it comes to fruition or not. Bye bye.